The euro is teetering on the edge, trading near its lowest point in 4 months against the US dollar, and all eyes are on Federal Reserve Chair Jerome Powell's upcoming speech. But here's where it gets controversial. Will Powell's words offer a lifeline to the struggling euro, or will they deepen its woes? Let's dive into the factors driving this currency pair's dramatic slide and explore the potential implications of Powell's remarks. The Euro-USD pair has been on a downward spiral for 2 consecutive days, hovering just below 1.1560 after briefly touching a 2-month low of 1.1542. This decline is largely attributed to a risk-off sentiment sweeping across global markets, fueled by escalating tensions between the world's 2 largest economies, the United States and China. The latest development in this ongoing trade saga is the imposition of higher fees on each other's cargo vessels, reigniting fears of a full-blown trade war. This has overshadowed earlier optimism sparked by U.S. Treasury Secretary Scott Bessent's announcement of a planned meeting between President Trump and Chinese President Xi Jinping. And this is the part most people miss. While the trade war narrative dominates headlines, other economic indicators are also weighing on the euro. In Germany, the ZEW Economic Sentiment Index for October showed a slight improvement, but it fell short of market expectations. More concerning, the index measuring the current economic situation plummeted to its lowest level since May. Adding to the euro's woes, German consumer inflation accelerated to 2.4% in September, up from 2.2% in August, as confirmed by Distatis. This data release further pressured the euro, pushing it lower. Shifting focus to the U.S., the economic calendar is relatively quiet due to a data blackout from the federal government. However, all attention is on Fed Chair Powell's speech later today. Here's the catch. Without concrete economic data to contextualize his remarks, Powell is unlikely to deviate from market expectations of 2 interest rate cuts in the next 2 Fed meetings. This lack of new information could leave the U.S. dollar's safe haven status intact, potentially exacerbating the euro's decline. A closer look at currency performance reveals a mixed picture. The euro has shown strength against the Australian dollar, but has weakened against most other major currencies. The US dollar, on the other hand, has appreciated across the board, buoyed by its safe haven appeal amid trade war fears. The heat map below illustrates these percentage changes with the base currency listed in the left column and the quote currency in the top row. For instance, the box at the intersection of euro base and US dollar quote shows the percentage change in euro-USD. Well, base currency, USD, euro, GBP, CAD, AUD, NZD, CHF, DAR TRIA, DAR PRIA, European major, TRIA 14%, negative 0.9%, negative 0.21%, negative 0.96%, negative 0.96%, negative 0.15%, negative 0.25%, negative 0.84%, negative 0.52%. GBP, negative 0.41%, negative 0.34%, negative 0.42%, 0.14%, negative 0.48%. JPY, 0.9%, 0.25%, negative 0.96%, negative 0.21%, negative 0.12%, negative 0.34%, negative 0.31%, negative 0.96%, negative 0.42%, negative 0.23%, negative 0.96%, negative 0.2%, negative 0.9%, negative 0.14%, 0.32%, negative 0.59%, negative 0.59%, negative 0.25%, negative 0.12%. Technical indicators on the 4-hour chart, such as the Relative Strength Index, RSI, and the Moving Average Convergence Divergence, MACD, signal continued downward momentum. The RSI is capped below 50, and MACD is on the verge of crossing below its signal line, both bearish signs. Immediate support is found at Monday's low of 1.1542, but this level is under threat as buyers struggle to gain traction. If this support gives way, the next levels to watch are the August 5th low at 1.1530 and the base of the descending channel around 1.1525. On the upside, resistance is seen at the intraday high of 1.1590, followed by Monday's peak of 1.1630 and the top of the descending channel near 1.1680. Now, let's circle back to the core issue. With the euro under pressure and the US dollar benefiting from safe haven flows, Powell's speech could be a make-or-break moment. Will he provide clarity that calms markets and eases trade war fears, potentially lifting the euro? Or will his remarks reinforce the dollar's dominance, pushing the euro further into the abyss? What do you think? Share your thoughts in the comments below. Do you see a rebound for the euro, or is its downward trajectory set to continue?